In this video, we'll look at selling our crypto or taking profits, or at least managing our portfolio and some of the strategies around making sure that you're in the right position and you have the resources that you need. I'll go over loads of different things in this video, including some of these charts right here. I'll leave all of this information down below so you can read it as well. But yeah, 2025 is a bull market year. We're very clearly in a bull market. We've literally come from 15, 16K down at the bottom. Now we're trading at an all-time high, basically 100,000. So we're in a big bull market. After the halving is usually a very good bull market year. Typically after that, that's when you get the next drawdown. And so, you know, people are asking, should we take profits or how do we manage this? So let's go through all of that. Firstly, I do believe cycles exist. Bitcoin is a macro asset and it cannot perform outside of the larger macro cycle. The debt markets are really what drive the price of Bitcoin, the economic cycle, right? No asset is immune from this. The economic cycle is the thing that drives prices in these cycles, and Bitcoin is very, very attuned to that. Right? The price of everything essentially relates to the price of debt, and so debt moves in cycles, and so do asset prices. You can see here, this black line is the current cycle that we're in. Doesn't seem like we're topping out. However, over the next 12 months or so, each previous cycle has eventually topped out at an all-time high and then moved into another bear market for maybe 12, 18 months, something like that. So, you know, people are asking, okay, we're at an all-time high, how to take profits? Do I need to take profits? But I think cycles exist. So the first one is, I'll leave all of this below, halving tracker. Basically the halving right here, Bitcoin usually has a really good bull market after that. Maybe because of the halving, because the new issuance halves, but I think it's more to do with the macro cycle as well, which we can look at. So what I do here, go to TradingView. TradingView's free, I'll link them below as well. Get the Bitcoin chart, change to logarithmic, like this. That puts this chart on. Then I just draw some fitted lines here, some curves, that track the trend rate of growth here in orange, and then an upper bound and a lower bound. Upper bound, the price seems to reject from to the downside. Lower bound, price seems to bounce from, to the upside. So this is the, Bitcoin trend. And I just try and fit this out into the future. These orange dots right here, or the green dots, sorry, are the moving average. So if we go to indicators, we'll type in moving average, just a simple moving average here. And then I actually put this in a 200-week moving average. This is for longer term investing and to know where the price will be over time. Just change this to white. Inputs, I do a 200. And then we go down to time frame. Just put this on the week. So I want a 200-week moving average, press OK. You can see the white line right here. So an investor, if you've been in Bitcoin for a while, for any length of time, your cost basis should be more or less the 200-week moving average. Because, if you dollar cost average once a week, once a day, whatever it is, you should match this. That should be your cost basis. I believe the cost basis, as you can see, it's in this green dot right here. I think that just moves up over time into higher levels. But of course, trading cycles is different because you can see the price really moves violently above this. And so if we're going to move back down into it, people say, do we want to sell? But I think these cycles exist. You can see they very clearly exist. Huge bull market and a drawdown, huge bull market and a drawdown, huge bull market, maybe a drawdown after that. Why do they exist? Bitcoin is just a macro asset. It's money, right? It's just a form of money. And so its price, valued in fiat currency, which we always look at it at, right? We're valuing it in fiat currency. And that means the price in fiat currency isn't just the network growth, it's also the other side. There's two sides to this trading pair. You have Bitcoin, but you also have the fiat currency. And so the fiat currency moves in waves in terms of its debasement and if it gets created or cancelled, right? Fiat currency is not money. Fiat currency is debt. It's created as debt from banks, either from the commercial banks, the central bank. The government can create debt themselves and force that into the economy as well. Eventually gets monetized from the central bank because it's never paid off through tax, right, ever, right? They always run deficits, or at least, at the very least, kind of no deficit, but they almost very rarely actually have surpluses. But in any case, fiat currency is debt, and the debt-based system requires inflation. The reason why it requires inflation is because everyone takes debt out, usually on assets that collateralize the debt. And if no new money was created, or even cancelled, if money was cancelled, then the price of those assets would go down because the currency would get stronger. The problem with that is that if the price level goes down of assets, goods, services, and wages goes down, that means the debt that you took out, which is priced at a higher level, actually gets more expensive and the fiat financial system collapses, which is par for the course of the debt-based financial system, which is why inflation is required, and which is why when inflation does come down below the target of 2%, they all get really worried and start having to print money or drop interest rates and spur this credit creation again, because a debt-based system absolutely requires price inflation in goods, services, and wages. So that will always happen, but it goes in waves. And so this is the waves. It's very clear, right? You have M2 growth in blue and the price of Bitcoin in orange. And you can see during these waves of M2 growth, which is money supply, Bitcoin price goes up. Well, it makes sense, right? Because you have this asset, this desirable over time, and it's more or less fixed in supply. There's still some inflation now, but it's pretty much irrelevant. And then you have the other side of the trading pair, which is this fiat currency, which is debasing itself and creating more currency units. So supply and demand, you have the same thing and more of these, so the price goes up, right? It's not rocket science. And you have that here as well. M2 supply, massive increase, Bitcoin bull market. Gets drawn down, bear market. Now we're in another one where it seems to be credit creation is getting encouraged again. That means the currency must get debased. There must be more currency units. What happens to the price of BTC? Well, it's going up, isn't it? So I think these cycles exist. Very, very important. If you're trying to time the cycle, then what else to look at, right? You have to look at these cycles in terms of M2 supply growth, money supply growth. What are central banks saying? Are they saying that they want to encourage credit creation? Are they saying that the economy is weak? It's not weak, right? It's just their GDP figures and their inflation figures, they need to be positive at 2%. If they're not 2%, they're going to start debasing the currency or dropping interest rates and encouraging credit creation to try and get those numbers up again, right? So these cycles exist. If you know them through the central bank, through credit creation, through money supply growth, you can much more easily try and just have confidence in what you want to do throughout a cycle. If you need to take some profits, you're waiting for a price. If M2 supply growth is up at the top right here, what's the next stage for the the currency cycle? It's not another huge bull market with more currency supply growth, is it? It's probably a drawdown. So it just helps you time things a little bit better. I think cycles exist because Bitcoin tracks the macro cycle, and debt cycles exist. They just do. So here we have an on-chain metric which shows the same thing basically, which is where the price of Bitcoin gets very, very, very high in relation to its longer-term kind of trend rate of growth. So the price is very high. This AVIV metric, I can't explain it in this video. I explain it in some others. I'll leave all of that info down below. Right here, you can see AVIV gets very high. That shows that the price is very high in relation to its trend. Same here for the bull market. And right now, doesn't seem like we're topping out, does it? But maybe mid-cycle or it's not a top out for a bull market. We've hit this price many times before. We've come down from that price here, you can see. So, there's no guarantee of what's going to happen to the price. But as an investor, you just have to kind of, make a best efforts guess in if you are trying to trade or take profits at some sort of top in the cycle, then, these are the metrics that I would look at. So AVIV is showing, maybe not a top out in the bull market. Somewhere up here would be definitely where the price is very, very high in relation to the trend. And so on average, if you did sell there, the probability of buying back a little bit lower may be quite high. However, you can see in this cycle, we topped out many different times and the price kept going and going and going. So it really, it is unpredictable, unfortunately, but hey, that is life. But I'll leave all of these metrics down below and the different charts so you can read them and just read into them and hopefully gain a little bit more perspective into how the cycle actually moves. I also have an entire section in the Crypto Investor course on-chain data, so you can learn how to read it and just get a little bit better insight into timing cycles or just being confident where you are in a cycle. The more information that you have, it makes you a little bit less panicky and worrying about should I sell, should I buy it. So I'll link it below. Crypto Investor course has 300 videos. Just get set up in crypto and investing, private Discord groups. I also give updates for free for existing users on exactly what's happening in the world, especially macro data and what the Fed is doing and interest rate policy and everything like that, which I give for free. So I'll link the Crypto Investor course below. But if you want to sell, what are the options, right? I think you have three options, basically. One is to literally just sell for currency, right? So you have to go to your exchange and you want to sell the crypto for fiat currency because you want to use it in your life. That's absolutely fine. You just have to find a exchange that has an off-ramp. Presumably, if you've on-ramped money, then you know how to off-ramp the money. In the Western world, G7 nations, Coinbase, Kraken have pretty good fiat currency on off-ramps, a few others. In some other regions, OKX, Binance, and Bybit are very good as well. maybe a little bit patchy in the fiat currency off ramps. I'm sure you have your exchange that you use anyway. The problem with selling to fiat is that you will, if you make a profit, have to pay capital gains tax in most countries. Most countries have capital gains tax. That changes. It could be anywhere from like, I don't know, 8% to maybe 20, 25%, depending where you live and what your income is. And so timing the top is absolutely impossible. Someone is going to absolutely time the top, right? I mean, a trade happens there, and so someone would have sold, the other guy would have bought. So someone's buying the absolute pico top and someone's selling it. But let's just assume that we're not going to win the lottery, so we're going to time the top maybe somewhere within 20, 25%, maybe 30%, something like that. Things move quickly at the top, right? You don't get long at the top of these cycles. Look at this. That was the top there. What's that? Maybe a few weeks, right? Here again, maybe a few weeks. If you can time it, great. But most people can't, so we have to rely on other factors. And the thing is, when you sell, right? If you're selling 25% off the top, then you're selling and paying taxes another 20%. That's a 45% off the top now. And you have to wait for the price to fall at least 45% if you want to buy back, right? Which is that, let's say Bitcoin drops 60% in a cycle. That's not a lot of wiggle room to actually buy back at a better price than if you just wouldn't have sold. So selling to fiat, you have to pay taxes. And that means that you have to file your taxes. If you have an accountant already, that's great, but it's a headache to sell. It's typically made difficult by the bank as well. Some banks, especially in the UK, getting lots of money from a crypto exchange deposited into your account. Lots of people get their accounts closed and everything. What you can do is sell to a stable coin. So I'm sure you know stable coins as well if you've bought crypto. Stable coins are a crypto version of a fiat currency. So what USDC and USDT do, so USDC, USDT, DT, this is Tether, this is Circle, two big issuers. And so they go ahead and buy dollars or short-dated government debt. And they have basically a money market fund, right? So you have, $50 billion of cash or cash equivalents in an account, and they issue one for one the stable coin, with that value, right? So there should be no depeg of that. Now, it has happened in the past because of liquidity issues and everything. So there's an issue there if you do want stable coins, but that keeps your money in crypto, right? So instead of having to off-ramp to a bank, you keep the money in crypto, but you don't have the price exposure anymore. And so if there's going to be a large bear market, that's great, and you have the dollars there. The upside of that is that you keep the money in crypto. Also, it's much better now to actually use crypto. So you have crypto debit cards and other payment systems that are letting you spend stable coins just like fiat currency now. It's a bit patchy, but it's an option just not to use the bank and have the issues there if they may arise with actually getting money into the bank. But that's still taxable, right? So you still have to treat that as a disposal and then figure out, where did I buy, where did I sell, and I have to pay tax to the tax man, which will be paid in fiat currency, not stable coins. So you have to figure that out. Liquidity for sure, paying taxes, because you create them in the previous tax year, you pay them after. It's a bit of a nightmare, right? So you have to make sure that all of that and your liquidity for taxes is sorted out. Or you could sell to Bitcoin if you're in altcoins. So a lot of people, would try and buy altcoins because they want to outperform Bitcoin. And so they buy the altcoins. Then at the top of the cycle, they're like, well, I don't want the altcoins. The altcoins are going to go down more than Bitcoin. So I switch it into BTC because I still want the price exposure. I treat Bitcoin as money rather than stable coins. The problem there is that if you've made profit, that's still taxable, right? So let's say you made a profit. That's 25%. Let's say your CGT, your capital gains tax, 20%. So 20% out, you miss the top by 20, 30%. Then you're in Bitcoin, which may fall 50, 60%. So you're even worse off because you're in Bitcoin, it still fell, and you paid the tax. So, what's the best to do there? Yeah, it's up to you, right? I think maybe selling to fiat or stable coins and knowing exactly what that is, and then paying some liabilities that you have. That's probably what most people do. Selling to Bitcoin doesn't make a lot of sense, right? By the time you factored in the price drops and the tax you have to pay if you made profits in the alts. But it's up to an individual. But that's really what you've got, right? You either sell to Bitcoin, you sell to another cryptocurrency like Bitcoin, or you just sell to a fiat or a fiat equivalent. If you've decided to sell crypto, there are three ways to do this. So the first one is through a centralized exchange. The other is through a decentralized exchange if you have your assets on chain already. And the other is through crypto cards, which let you spend crypto directly. However, all of this is not the easiest, right? So if you use a centralized exchange, no issues. Just use one of the top 6 exchanges, right? Don't muck around with any other exchanges, because some exchanges, may go bust in a bear market. And so you put your assets on there, you think, I'll just leave them there to sell them, and then FTX happens and it's all gone, right? Absolutely insane. So the top 6 exchanges, these guys have been around for a long time. These are kind of more G7 or Western style. These guys have lower trading fees, but the on and off ramps tend to be a little bit patchier. So you can see here, Binance, Bybit, OKX, their trading fees are around 0.1%. Coinbase and Crypto.com, anywhere from 0.5% to 1%, right? That's an order of magnitude more. Why give that away if you don't have to? Kraken's around 25 to 40 basis points. Out of these Western ones, Kraken, I think, is best trading fees, and I'd use those. Binance, Bybit, OKX are much better, but the on and off ramps tend to be not as good. You do get free tax tools on most of these exchanges now as well, but they only relate to exchanges on that platform. So if you've been trading on decentralized exchanges or from your crypto wallet, they're not going to help you with that. And so there are some other tax tools. I'll link them below as well, where you can put your wallet's addresses in, and it tries to figure out when you bought and when you sold, and you can put together a tax report like that. But unfortunately, they are paid, I think. Or you get a freemium model where they give you some free, and then you pay if you have to make the report. You don't have to off-ramp. You can actually just spend your crypto through a lot of the crypto cards. Bybit have one, a great one. Crypto.com have a card. Fees are way higher on that though. The problem with that is that every time you spend crypto, that is potentially a capital gains tax liability. And so you're going to have to account for that at the end of tax season, which is a nightmare. So what I'd recommend if you do use cards is to sell in chunks and then turn it into something that isn't going to move in price that you can spend and load fiat currency onto the card, or a stable coin which isn't going to move in price. There's no tax liability if you buy £1 or $1 and sell it $1. There's no tax liability there. So but selling the crypto into a stablecoin could be. All right, so don't spend crypto on cards if you've got tax liabilities, right? Just sell in a chunk. But you got to use one of those, right? Decentralized exchanges, super expensive. You sell on the DEX, then you got to off ramp it. How do you off ramp? You're going to have to pay one of the off ramp services like MoonPay. That's like 2 to 4% in fees, plus your capital gains tax. What you're looking at, 20-25% in fees just to off ramp. That eats into a lot of your profits. So something to be aware of. I'll leave the exchanges I use down below. You can get some good deposit and trading bonuses if you're new on a lot of those, maybe some fee discounts as well. I'll leave all the information down in the description. Now I want to come on to something that isn't often discussed, and I think it's the most important thing when putting money at stake, right? Which is the mindset of investing. We all come to the market differently, and that's where a lot of arguments happen, because people just have different goals and outcomes that they want from what they're doing, even though they're trading the same asset. They have different time horizons, different goals, different outlooks, different income, different spending, right? And so you just can't say that one time is the best time to sell. The reality is, I think Bitcoin continues to appreciate in value for my whole entire life, right? Just like the stock market. The stock market is going to be higher when I'm gone than it is now. Right? That's almost certain, right? If everything stays, we don't blow each other up first, right? So given that, we could suggest that if you want to make the most amount of money, you have to hold the thing for the longest time. But we also live as well, and we need cash to buy things that we want. We have different things we want to spend on. We have different goals. A lot of people want to get their first house, put a deposit down or whatever. And so the mindset of this is individual. I was a broker, right? And so I dealt with a lot of people and a lot of accounts and their portfolios and everything. We would never, with a client, try to trade prices in the market and just say, we're trying to trade, we're trying to make money. We would never get a client in and have a meeting with them and just say, yeah, we just want to make some money and we want to buy. We ask them questions like, well, how old are you, right? How old are you? What's your income? What's your spending? How much can you afford to invest for certain periods of time? What do you need the money for? Most people need money for like 4 things, right? Retirement, car, house, and then kids and healthcare, right? And like that, right? That's really what you're saving for. Everything else is superfluous. Holidays, clothes, watches, it's all nonsense, right? You're not saving for that, right? If you've got money, you buy it, I suppose, but you're not investing for a watch, right? Maybe some people are, they love a watch. Right? Everyone's individual. Everyone has a reason why they want to save. Most people, it's retirement, healthcare, education, kids, that sort of thing. And so you probably can split up your investments into certain different bags within your portfolio. Everyone probably needs a retirement fund, so you have some in there. Maybe your trading fund or your active trading fund or something that you want to get in and out a little bit quicker. That's a certain percentage of your portfolio, and so the mindset is different. But you have to compartmentalize those different parts of your portfolio, because I think a lot of people come into the market, especially crypto, when the price has come from like 16,000, now it's 100,000, right? A huge move up, and everyone comes in their first cycle, I just want to make money. I just want to buy, I just want to make money. So that is not the right mindset to have, because you are now at the whims of the market, because you're relying on the market to move up so that you can make some money, but you don't know why you're in, you don't know why you bought, and therefore you cannot sell with any structure, because your mindset's in the wrong place. You know, you came in kind of wanting to make money, and you didn't really do your research, you didn't know that we're very mature in a bull market already, you just want to make some money, you don't know what price it may get to or anything. So you're in a weak position and you got in for the wrong reasons. So you have to go back to basics and say, why am I in the first place? Why am I buying now? How long do I want to buy this for? How long do I want to hold it for? How much of my portfolio is tucked away for the retirement versus how much am I actually actively trading, and therefore this is my specific plan. So the mindset's so important, right? So do not ever rely on the market. When you come to the market first, we're talking about selling, but actually you cannot have a selling strategy without actually first having your entry strategy in. Why the hell are you buying right now? Are you buying now? Why? What do you expect for that cash? Before you even buy it, you have to have a clear, a strategy in your mind that this amount of money is only for short-term trading, and I will sell when the price gets to a certain level, or when we are mature in the bull market, because I'm looking at the Bitcoin cycle and I can tell that maybe we have 6 to 12 months left. And so this specific amount I'm going to be selling within the next 6 to 12 months, no matter what the price, right? Or you have your investment bags and then you say, well, I'm just not selling, I don't need to. So that's up to the individual. No one can really tell you. I can't tell you where the price is going to go. I can only look at the cycle and give you various areas. And that's the exact same thing I look at as well. Have a redundancy have redundancy in your plan, sorry. If you are massively over-invested, you just want to make money and you want to make it this cycle, that's where everyone gets caught out again. You are relying on the market and you're not in a position of strength where you can say the price can drop, I don't mind, right? That's, again, up to your plan, but don't go all in into crazy stuff because you want to make money, because you're relying on the market, and you should never, ever, ever rely on the market, because the market, it moves in a way to give people the most amount of people the most amount of pain. Do not get caught out. Do not overinvest. Do not try to make it, because again, you'll get caught out. You're relying on the market, right? So what do you want to happen? You just want to get rich by pressing some buttons. That's not going to happen, right? You need a plan. You need to get income and value, and then save that over time in the assets. Trading prices is always a lot harder because the market moves in certain ways over the short term. So we just don't know. Investing is deferred consumption. You already made your profit by earning the money in the first place. Investing literally is deferred consumption. And so the best way to think about it is, if you want to go in and buy assets, really hold them for 4 to 8 years before making any decisions about trading them out. That's investing. Now, if you're trading, that's different. You just have to trade short term. If you are in your head thinking, I'm not going to hold this thing for at least 8 years, then you're trading, not investing. And so you kind of have to have a different mindset of, you just need to get out at the top of the cycle, whatever the price is. Again, within 6, 12 months, if we have a really good run, you have to sell out, right? It doesn't matter. Don't wait for the price to get to this level. That never happens. That's your trading environment. Now, for me, vast majority of my BTC is investing for the future. So this cycle, no, I'm not going to sell it. I'm not going to trade it out. I'm just going to leave it, because I'll sell in 4, 8, 12 years, right? And I've been holding for so long already, right? So I don't need to sell out. I don't want to sell out. Don't sell assets. You maximize assets. Maximize assets, maximize income. You can think of life as assets versus liabilities. Bitcoin is an asset. The only thing you can sell it for is a liability. I don't want liabilities, right? Now, if I have to pay my liabilities, then I need to pay for that, but you need an income as well. So if you just think in a longer term mindset, it will actually calm you down a lot. But if you do need the money and you're overinvested, then you do have to trade out at some point in this cycle. And there is no price that we can get to. You just have to think, look at the cycle. I'll leave all the links below at this. 6, 12 months, 18 months, maybe something like that. You have to sell out at some point. You'll just have to pick a date and hopefully pick a price if we get a few pumps and say, that was it, right? Over the short term, you can't make as much money as holding assets for longer, right? A price cannot move as much in 6 months as it can in 6 years. It's just impossible. So minimize liabilities like high interest debt, car payments, frivolous spending, right? You have to minimize that so that you have strength to say, if the price is quite high and you're taking a profit, can you afford that to draw down again? If you can, there's no difference in your life, right? If you're overinvested and you're trying to trade and trying to make it, that's where you get weak. And that's where a price drop's really going to hurt you, because then you don't have enough to pay your liabilities, which is, a weak position to be in. So you have to just grind away at the market. Elon still works, right? Elon Musk still works. So we should as well. We shouldn't think about taking profits and trying to make it in one cycle. It's just going to put us in a weak position. You have to sell for a reason as well, I think. When we had clients come in, they were not trying to say, hey, we just need to make money, because we want to buy some stuff. No, it was, we're working, we have income, and we want to save money for the future, for healthcare, education, retirement, pension, kids, this, right? Those are the things. So if you are selling now, because you invested previously, maybe you've been in Bitcoin for 8 years, something like that. You're sitting on very decent profits. I mean, the whole network's in profit. Why sell if you think the price is going to still go up? Well, either you have a reason, like a house, a deposit, maybe improve your car, improve your house in some way, something important to actually trade for. Why just trade the price to try and make more money? Like I said, if you sell, you miss the top by 20%, you pay 20% capital gains tax, you're already 40% down, and Bitcoin may dump 60%, so now you've got a 20% area where, are you going to buy back? Are you going to buy the same amount back? Probably not. So I would say to everyone, Bitcoin is a growth asset. Invest for at least 8 years first before even thinking about selling. And then after that, if you are in an upcycle, you can just take some out to pay for your life and making your life better in some way. But to try and trade it, that's a very specific skill where you have to be much more active and just say, look, I bought at a high price, I want to sell at a slightly higher price, and then get out, because that's what you're doing, right? You're trading. So it is about mindset. It's very important, and everyone's different and the needs that they have. The best thing I can do if you're trying to take profits and trade short term is look at the previous cycles and look at the macroeconomic cycle and tell you that this year is the bull market year, and it may have a top this year or maybe early next year. And so at some point you're going to have to look at selling. And I don't know what the price is going to be. No one can tell you. What I would suggest doing is taking all of your potential income, assets and liabilities, maybe any debt that you have, and just making a plan for the next few years. Because if Bitcoin does top out in 25 or early 26, somewhere around there, maybe you go into another bear market. Bear markets, Bitcoin's going to draw down 50% or so. Now, a 50% drawdown also, it may not matter that much if you've been in Bitcoin a while, because let's say Bitcoin's at 100K now, right? Let's say it doubles to 200K and then it halves to 100K. Is that really an issue if your cost basis is, the cost basis of the network, maybe 50, 60, 70, I don't know what your cost basis is, but if it doubles and then halves, that isn't really a big deal. It's only the people coming in very late cycle, which is now, that may be seeing a drawdown. So again, this matters your actual time horizon. If you're a long-term investor, that means you really do just invest and you're not going to touch it for at least 8 years or so, right? But if you are coming in now and buying, again, you have to look at the cycle and think, look, we could draw down in the next bear market to 70, 80K, something like that. So if you're buying at 200, that's going to be painful. If you're trading and wanting to make money and coming into the cycle with that mindset, right, doing that at the top of the bull market is just the wrong time. So again, you have to be aware of the cycle. I'll leave all the links below. And what I would suggest is taking a plan over the next few years and a bear market. And as long as you can handle drawdowns, you're fine. So what are your costs, right? Maybe you have rent and mortgage. Let's say your mortgage is at 7%. So should you sell Bitcoin at the top of this cycle to pay off your mortgage, or at least have the cash to pay your mortgage? Well, that depends on if you think your income is going to be fine over a bear market. A bear market, I mean, you're looking at maybe a recession or hiring slows or maybe some unemployment. And so some people, maybe lose their jobs in a bear market, right? You have to think about how reliable is your income. Again, we're all different. But for me, if I have a mortgage at 7% and I'm paying 7%, I think Bitcoin's annual rate of return is going to be way more than 7%. I have it at maybe 40, going into 30%, maybe 25%. Let's say Bitcoin's ARR, or annual rate of return, is 25%. Do I want to sell at the top of a cycle to take that cash to have money in the bank to pay the mortgage or maybe pay some of it off. No, right? That money is better spent just in the market over time, making 25% returns, right? Versus paying off my 7% debt. You should keep the debt and then keep the 25% returns. And what you're doing literally with BTC is demonetizing your debt at 7%, right? Now, do you have car payments at 9%? Should you pay off your car? Well, technically no, if Bitcoin's up at 25%. Again, you're demonetizing the debt. However, you know, again, it's down to the individual, because having all these payments every month, maybe you don't want that. Maybe at the top of the cycle, you're like, do you know what? I'm going to take some profits here. I'm just going to pay off the car. And I don't have that worry anymore. That's going to leave me more income during a bear market to actually go back into Bitcoin at potentially lower prices. That's a much better way of managing your life, your income, your debt, and your assets, rather than just trying to trade prices. Trading prices is a weak position to be in, because you don't know what's going to happen. You're trying to trade something that you cannot predict. However, you can predict your life, your income, your debt payments, and the longer term aspects of assets that grow versus fiat currency. That's a much better position to be in. That's why I think you should invest in Bitcoin for at least 4, 8 years or more, because it gives you some assets, right, versus income to actually play around with. And it gives you the time to be a little bit more laid back about where you buy and sell, and you can take advantage a little bit more. When you've got all your assets, all your money over invested in these coins that are really volatile, you're in a weaker position versus, you know, actually thinking about these things a bit longer term. Student loans, if you have a student loan, maybe you pay 5%, 6%. Should you pay it off? Again, if Bitcoin's demonetizing these things, then no, right? You should keep them as long as you can keep the payments, as long as you think you can keep those payments, right? Credit card, if you have credit card debt at 20%, should you pay that off? Should you sell towards the top of a bull market if you've got some Bitcoin? I probably would. Credit card debt is the most lecherous type of debt, and certainly something this high, you know, versus, let's say Bitcoin annualizes at 25%, you want to be paying that off, right? Because credit card debt just, it's crazy how high it is, especially right now. Interest rates are very high on credit, so you don't want to be paying that, right? You would rather be paying that off and just having that out the way, and then hopefully the income that comes in over a bear market, you can start dollar cost averaging again. So I would pay off any high interest debt or any debt that makes you feel uncomfortable in any way, definitely. And then you've got, you know, other costs that you put in. Then excess capital after that goes into those assets again. There is no such thing as money. There's assets and there's liabilities, and you can manage those. And if you're taking advantage of the debt-based system, right, or by taking out this debt at low interest rate and having income available to invest in the asset that's demonetizing that debt, that's the game. That's beautiful, right? That's what mortgage holders do. They mortgage their entire life for 30 years. They mortgage their entire income for 30 years. They go short the currency for 30 years and they buy the asset. And that's how they make money. Not the price of the house is going up in fiat terms, right? As long as the mortgage rate is below the rate at which the property goes up in value, which is about 7% or so, then they're actually just taking advantage of the fiat system. So that's the thing that we have over and over again is short the currency, go long the asset. But if the interest rate is too much, maybe start paying it off. And then just think about it, not as one buy and one sell. If you're selling at the top of the market, think of it as, you know, over the next few years, what do I want to sort out? Right? If you've got assets and you're sitting on a lot of profit, you can sort out your high interest debt, you can sort out some other liabilities that you have, and then that income over the next few years, if you think there's going to be a bear market, you can just slowly invest again. So that's how I would think of things. Just have your plan, right? And just make sure that you don't get caught out, because the one thing we don't want to do is get caught out by going in too much at the top and getting drawn down on. And if we do get drawn down on, that's when we have to have firepower to go in as well, because that's where the most returns are made. I also want to touch on tax as well, specifically. I discussed it earlier in this video, but it's so important. I've seen it so many times, you know, people making a bit of money in a cycle, and then they go and spend that money on something frivolous, right? And then the tax year ends and they have a tax liability. The problem with it is you make money in the previous tax year, then you file the taxes, and then you pay in the next tax year, right? And so you have to manage that. People spend the money that they made thinking it was theirs. The bear market comes around and they have to pay tax and they don't have the cash. And then the things they bought, they can't sell them because they're in a bear market and they're stumped, right? What are you going to do? So make sure that you know exactly what your tax liability is and you have the cash there, you don't spend. You just keep that for the tax man, right? Because you can end up in a world of trouble. Also, trying to buy and sell for profit. So if you're trying to sell the top and then buy back lower, let's say that you miss the cycle by top of the cycle by 20%, you pay 20% CGT. You need a 40% drawdown. What if Bitcoin draws down 60%? You've got a 20% price window to buy back. So I think buying and selling for a cycle doesn't make a lot of sense, actually. If you look at the data, you look at the way these things move, you look at the annual rates of return, buying and selling for one cycle doesn't actually make a lot of sense unless you're day trading a little bit shorter. Maybe you're trading assets that don't have tax liabilities. Like in the UK, you can trade CFDs which don't have CGT on them. So there's other ways around that, right? It's up to the individual again, but make sure that if you do have a tax liability, you have the cash there and you don't spend it, because you'll end up in a world of trouble. Instead of selling out at the top of the cycle, should we actually just borrow against the value of our crypto at that point, right? Rich people don't sell assets. Rich people play the game, and the game is to short the fiat, long the asset. And you do that over and over and over again, right? Because let's say the US dollar debases at 10% a year, which it has done more or less for our entire lifetimes. Other fiat currencies worse. You short this and you go long the asset. Rich people usually do it in real estate. So 7%. Bitcoin is currently annualizing at 40%, but hugely volatile. The game is not to sell the asset and pay tax. The game is to short the fiat currency through debt, pay off the interest, and let the assets demonetize the debt and the interest because they're growing faster than the rate at which you pay. That's what rich people do. You do not sell assets. Your life is about assets and liabilities. You don't sell assets. And if you have a liability, if the liability is being demonetized by the asset, then it's not a liability, is it? But the problem here is that the volatility of the assets that you're collateralizing and having income over time to make sure that you don't get wrecked. Debt system is, it is a crazy game. So, should we borrow against Bitcoin? Rich people borrow against stocks, businesses, and real estate, which is much lower volatility. The problem with Bitcoin is that it's 60 to 70 volt, which means that at the top of a bull market, if you take a loan out, this thing could drop 60%, right? And so if you've got a 50% loan to value, you're going to get liquidated. That's not good. So you need to make sure that if you are borrowing against Bitcoin, I would say 10% loan to value max. The thing is just so volatile that you may end up thinking you're doing a clever thing and then you just get liquidated. Also, if you're using a borrow lending business, you now have credit risk to that business, which is borrowing and lending. During a bear market, people go bust, they can't pay back their assets. Do they have the assets? Now, obviously with DeFi, I think what Coinbase does now is let you borrow against your Bitcoin, and it's all on DeFi. Now, DeFi is over-collateralized anyway, and so the liquidations there happen, and there shouldn't be any bad debts, but there's credit risk here, right? And so you have to be aware of that. And then also, if you are borrowing any more than 10, 20% of the value of your collateral at the top of the bull market, you're going to get drawn down on. And you may get liquidated, which means that you don't have the assets anymore. I can handle a 60% drawdown and just hold it and wait 18 months until the price bounces back. But if you get liquidated, you've got rid of your assets at the lows, which always happens to people, right? Because they overdo it. So it is a game to play. It's much better to actually borrow against lower volatility capital, a house or something like that, rather than a really, really highly volatile thing. But I understand a lot of people maybe have the assets in Bitcoin. So if you need cash, then definitely taking a very, very small loan is going to make that cash available for you. And in most countries, if you take a loan against the assets, then you're not disposing of them, meaning that you don't pay CGT. So it can protect you against CGT, taking a small amount out. But you do open yourself up to credit risk of the institution that you're using, potentially high volatility where you might get liquidated on some of that loan. If the price does fall, can you pay off some of the loan to reduce the loan to value? 60, 70 vol asset means 10, 20% is absolute max in terms of what you should be borrowing. But that's what rich people do, right? They play the game. They short the fiat, they go long the asset, and you don't sell it. You take a loan if you need the cash. That's different. That's not buying and selling to make money. That's just managing your portfolio versus trying to trade, which, again, requires at least 8, 10, 12 years in the asset, getting the returns before you can start playing around. The only advice is, if you're in Bitcoin for 2 years or so, just maybe think a little bit longer out and try and make sure that you've got cash to pay liabilities in the short term. And then you actually, make some returns in the asset first, and then you can actually start to manage your portfolio around the edges. If you decided that you want to sell, how do you actually go ahead and do that? There's 4 ways to do this, I think. So the first one is just selling all at once. You've reached some level and you probably have something to buy or purchase, and you just say, yeah, I want to sell. Sell all at once. You dollar cost average in for the most part, which is buying regularly, but maybe you just want to sell all at once because you've reached a certain thing and you just want to take out that amount of money. Go ahead, sell all at once. No one can tell you where the price is going to be today, tomorrow, next week, right? Again, look at the cycle. That's the best I can do, right? The best I can do is look for areas of where the price may be pretty high and try and sell out. The problem here is that you may miss out on further gains if the price rises, but look, you've locked it in. You know exactly what your capital gains tax liability is, and so that's going to be a lot easier. But if you sell all of your crypto, you now have no assets left, which means that's not a good thing to do, right? Assets over liability. You need assets. You want to hold those assets. You want to hold through the volatility and make sure that you can pay your liabilities. But if you sell all your assets, you now don't have any assets, which means that you all have liabilities now. Cash is a liability, to be fair, because it's a debt system. Remember, fiat currency is not money. It's not an asset. It's a liability. And it will debase 100%. You will lose purchasing power in that unless you've got stuff to buy it, and that's fair enough. But we want to be accumulating assets over time. You shouldn't be over-invested that you actually need to sell assets to pay for your everyday expenses. If you've got something big to buy, you want to go into a house or something, then sell all at once, right? Get out. If you've got that thing to buy and you've got the cash, buy it. You can also sell a percentage. So, maybe you want to sell 20% of your bags at the top. You say, that's fine. But again, you're paying tax on that, or maybe you're taking a loan out on it. So you can sell a percent or loan against or borrow against a certain percent of your portfolio. That gives you fiat liquidity if you need to pay for stuff. But you will pay tax on the profits, but you still have assets in there. Maybe they go a bit higher. Maybe you sold out a bit too early. Who cares? Because you made a profit anyway. So you can sell a percent. The other is to take a loan out against the crypto. That gives you fiat currency to spend if you need to spend any of those things. But obviously, having another loan there maybe isn't what you want, right? But you must keep the LTV, the loan to value, extremely, extremely low for Bitcoin. If you're taking loans against altcoins, I think it's probably like 99% certain you're going to get wrecked on that loan. Maybe that doesn't matter. Maybe you take the loan, you have the cash. But if you are getting wrecked, that means you're getting liquidated, which means it is a disposal of the asset. So you have to work that out again, potentially with capital gains tax. You might have to still pay if you got liquidated at a price that was above your entry. Again, you're going to have to work that out. You could just sell nothing, right? You could just say, you know what, I've only been in for 2 years. I think I need to wait another 6 years at least before even trying to manage the portfolio, right? You just haven't invested for long enough. You haven't actually gained access to the growth of the asset. The way you gain access to the growth of the asset is actually buying when the price is relatively low, not when it's relatively high, trying to make money. So again, that's up to the individual, but it really, the only thing a bear market, right, is you need to pay for your liabilities. You need to make sure that you have the income there to pay for rent, mortgage, car, everything else. If you've got that, right, then you can just make sure that you can stay in the assets and let them go to work over time. Because it's deferred, an asset is deferred consumption, right? You're investing because you want to use it in the future at some point. The longer you hold an asset, the more you're going to outperform the fiat currency. So, don't overinvest. Have cash flow and income to pay your short-term liabilities. People never put back the amount they sell. It's just a trading mindset versus an investing mindset. I really do think investing mindset is the important thing. Make sure healthcare, education, retirement, you always have to be thinking about that on a low level. If you want some cash, go to work, earn income, and then you don't have to sell your assets. You're going to be better off in 4 years if you didn't sell them, because it will probably be higher if you're in the right assets. So that's actually selling. There's different ways to do that. I'll leave all the resources down below and the crypto investor course down below as well. I make updates there for free for existing users. Exchange bonus links down in the description as well. I'm James, this is MoneyG. Cheers for watching, and I'll see you in the next one.